everybody? Happy Monday. Um, so quick recap. If you're new to the channel, this has become my video blog on me passing the FTMO challenge, right guys? So I started a challenge about 2 months ago. I was able to pass one phase one, the other one I had a free retry. And then currently we're in a phase two and a phase one retry. At the end of last week, we're sitting at 3.2% on the phase two. I had a little bit of drawdown in the beginning on that account, and currently we are sitting at I'm sorry, at the end of last week we were sitting at, I believe, 7.3% on the phase one, right? So I just want to get right into talking about as far as the entry on the strategy, right? So I know that I had some questions on what's a fair value gap and like, I guess, like, how do you how can you tell where there's a fair value gap? So a fair value gap is very simple. It is the imbalance in price between three candles. So either going up or going down, right? You have a group of three consecutive candles. The middle candle is where there's going to be a fair value gap, where the wicks of the previous, the candle on the top and the bottom do not fill the gap in between the middle candle. So as you can see in this scenario, your fair value gap would be this space right here in between the wicks, right? If the wicks were like this, how they were earlier, that would not be considered a fair value gap because price actually mitigated and filled the imbalance, right? So that's basically what you're looking for. You're looking for a gap imbalance between three candles. And if that doesn't pop up, I also take a look at the optimal trade entry, which is the 61.8 on the fib. So our strategy is super simple, right? We're trying to catch a reversal. We're looking for a higher low to be broken, a change of character to happen. So for example, this from here to here would be your change of character, right? Because you broke this low. So this high was taken out by this high, and this higher low was taken out by this this leg here. So within this leg is where you're going to look for your fair value gap or your optimal trade entry. You want it to be above the 50%. So you want it above this point. That's like where you want to be as far as when a fair value gap comes to play. If your fair value gap is on the bottom, it's a little more riskier, right? Your risk to reward isn't there 100%. So if you take your fib out, top to bottom, because we're looking for sells, right there is your 61.8. Short position here, stops above, and 2 times the risk. That's it. That's pretty much how the strategy works, how it's supposed to work. Guys, it's just repetition, doing it over and over again, getting used to it, getting comfortable. I'm saying all these things, but I'm more saying it to myself more than anybody else, and it's hard. The psychology behind this is not easy. Anyways, jumping into today's trades. Now, let me replay price before we even look at the chart. Let's replay price. Spoiler, we are taking sells. So again, the strategy is super simple. If you're new to the channel, I have videos posted. Not the best videos, but I got some videos posted explaining the strategy, right? You're going to take price from 12 a.m. to 8:30. You're going to mark out the highs and lows. I basically run through this every single day that I take a trade, and you're going to wait for the break of the high and low. I've been focusing on the 5-minute entry opposed to the 1-minute just because my win rate is higher. We took out the highs. So what are we looking? This higher low to be taken out with displacement, right? To get in on the trade. It happens. Now, there's a few fair value gaps. There's one here, and a small one up here. This fair value gap right here actually lines up pretty good with the 61.8, so this is the entry that I took. However, today I didn't go full risk as far as what I was risking last week. Why? Because as you can see, it's 9:25. 8:30 is about to come in, and I took the trade because my setup was there, and that's how I back tested it. So I took the trade, but I did take less risk. I only risked a 0.25%, so I only made $500, right? So I ended up shorting here, and then I'm gonna drop down to the minute so you can see how price action played out, because on the 5-minute it goes too fast. So here we are, right? Playing price forward, tagged in, and then full TP, right? It actually caught that other fair value gap as well up here. So yeah, that's pretty much the trade. Then price continues to go up, take out the highs again. So if you were looking for possibly taking this trade after 9:30, you could have, but you would not have. You wouldn't have been. I don't think it went to a 2-to-1, from what I remember. So at this point, this higher low is taken out, right? Displacement, great. You're not gonna get in on this fair value gap that's here, because when you mark it up, if you mark up your fib, well, you could if you really wanted to, right? It's the decision is ultimately yours, but I would go higher, right? I would at least be here. It's just the risk to reward would be better, right? Targeting 2 times risk, which is about here, taking out almost the lows. So the markup is decent, but I don't think price ever made it 2 times risk. Let's see. Almost. All right, so almost there, but no cigar, right? So you ended up getting to 1.77. Not too bad, right? Uh, Now, I'm going to be completely honest because I like to be transparent on my channel. While this was playing through, I was very upset that I didn't take full risk. And when this move played out, right, I did catch an entry, but I closed it early. I took an entry not on my phase 2. So my phase 2, I still closed with $500 profit. So right now that account is sitting at 3.7%, right? So all we need is 1.3% more, and we passed phase 2. And then my phase 1, I ended up making an additional $250 because I took a 1-to-1 on this, and I risked another 0.25%. So I took a 1-to-1, got out quick, and that was it. So currently we are sitting at 8% on my phase 1. So, and we have 4 days left. We do get an extension, and I contacted FTMO asking how that worked. They said the extension is going to pop up between the next 2 days. Look for it, click on it if you're above 5%, which we are, and get the extension for 15 days. So I'm confidently, and I'm speaking it into the universe, that we're gonna pass this shit, right? I still have a month left on my phase 2. Looking at my phase 2, right? The first 3 trades I took, I risked 1%, lost those 3, right? Um, that account is sitting at $3,700 after losing 1%, then dropping my risk to 0.5%, right? Just because I didn't want to blow that account. This is the closest I've ever been, right, guys? So I am trying to be very conservative with that account and pass. Now, putting into perspective, I'm risking 0.5%, and I still made almost 4% on that account in a month. So if I had 10 accounts going, which is my goal, right? It's my first goal is 10 accounts at 4%. That's that's $4,000 a month. That's 40 grand, right? So $40,000. That is, let's see, 8 and 8 is 16. It's $32,000 that I end up with, I believe. Not the best in math, but somewhere around that after the profit split, risking 0.5%. And in the beginning, my plans are I'm going to risk 0.25%. So I definitely know that I'm not blowing an account, right? And then from there, I'll probably, start messing around with risk to reward as far as what percentage to take, what trades on. There's a bunch of other platforms out there that I can then move on to, like the funded trader, and maybe treat those accounts a little more aggressively. So that's where my mindset is here. I did trade on ES on those other 2 accounts I have. I took losses. I could have taken uh, the second entry, but I decided not to because honestly, I'm only supposed to trade once a day, and it is what it is. I took a loss. I took a loss. So taking a look at ES, here's your low. Here's your high. Now I'm gonna talk through and what I feel like my mistakes were, and how I believe I'm going to at least avoid them in the future. Right? The high was taken out, and then we got displacement. Right? So I took the very extreme fair value gap. That was my entry. Now, what I should have done, I had a tight stop. I should have had at least 4 points on this. From my back test, I remember that was something that for these trades, I gave it 4 or 5 points as far as a stop loss. If the stop loss was too small, typically I would get stopped out. In this scenario, that's exactly what happened. I need to make a checklist for myself to make sure that I keep these things in mind. So 9:30, the move that happened on Nasdaq was this move here. It's a little different. ES moves a little different. Price came up, tagged in, and then obviously if I kept my stops tight, I got stopped out, which is exactly what happened. Like it came, kissed my freaking stop loss, and then dropped. Right? So I have to mark it up as a loss when it comes to my Excel sheet. Now, taking a look at the trade, again, same scenario. This high was taken out, right? And then so was this higher low. There's displacement. Here is a fair value gap. Now you could have taken this fair value gap, which I was going to. I had a limit order put in, but then I backed out because I really want to try to adhere to my rules, and show you guys that even making mistakes, you can pass these things, right? If you've watched every single one of my videos, early on, you would have seen that I made a bunch of mistakes, like a bunch of them. I'm playing price forward, eventually full TP. So this would have been the right move. Now I was also dabbling with the idea as far as when price comes into my area of interest, right? Let's say this is where I'm looking to take price from, right? Or anything above here. waiting for the 1 minute chart to show some sort of change of character, right? Which, let's say, claim price. So let's say it would be somewhere around there. Let's say you put a limit order short and above. Do we get tagged in? I don't know if we get tagged in on this, but I want to take a look. No, we don't get tagged in. So maybe just going right in on the break of structure, right? Let's play out. No. So maybe just going in on the actual change of character, right? Like going in on this change of character or this break of structure, and I don't know. It's an idea. Typically, like I'm thinking as far as for my 5 minute strategy, it was honestly just setting a limit order and walking away. And maybe I just have to chalk it up to it being a loss, right? Losses happen, and that's it. But I'm definitely there's a few things that I'm going to do with my Excel sheet. I'm going to go back and take a look at my losses and see what time they happen. I'm going to start keeping track of my time. That's another thing. Let me see if I can pull this up here. Close. Open. So keeping track of data is really important. Uh, I don't know if you guys have anything like this, but I suggest try to, right? Like a trading journal where you can keep track of your data. Look at that. I didn't have these here. So all my information's here, right? Now I got to put in the time to see if there's any issues when I trade or when I'm taking the trade. Maybe my losses happen before 9:30, right? Because I'm looking for trades after 8:30, and sometimes they do pop up. Maybe they don't. In this scenario, right, I have a 50% win rate on Mondays. But if you take a look at my Mondays is number one. So if you take a look at all my Mondays and you take off the red folders, right, you're gonna notice that out of 8 trades, I had 5 winners. Right, so my win rate is obviously higher on Mondays than anything else. What's that? I see. Delicious. Thank you. So looking at my data this way has, I'm trying to, I'm saying this to myself, right? I'm trying to use this information to help me be okay with the trades I take, right? So taking a look at the data, knowing that I have a 50% win rate, I lowered the risk and that was my decision. But knowing that my win rate increases when there's no news, right? I should have maybe just stuck to my guns and risked 1%, right? Now, that was actually okay, I'm sorry. That information would have been on this chart, which is the NAS 5 minute. So Monday is a 67%. If we take over here, we take it to just Monday trades, we'll see that we have a total 15 trades that we've taken, and 10 of them have been profitable trades. So what is that? That is That's a 66% win rate, 67% win rate, which is um, actually what my Monday's win rate is, right? So that's not bad. I definitely should have probably looked at that. I didn't take that into consideration until after I was in the trade, because then I thought to myself, okay, what can I do to be able to take these trades and make myself feel a little more at ease? And honestly, it's just diving into the data, right? It's sitting there and taking a look at um, everything that you've compiled, right? And just being sure of your edge. That's what I'm trying to do. So I really highly recommend journaling, taking down as much information as you can of of how your trades are progressing, right? So, for example, if it happened tomorrow, which is Tuesday, maybe not, because, or on a Friday where my win rate is a 42%, maybe, yeah, definitely 15% risk um, would be the right idea. And at this point, you could definitely sit there and say, hey, maybe I could start risking less on the days that I'm typically losing, and risking more on on your other days, right? On, let's say, Monday, Wednesday, Thursday, where you're above a 70%, then definitely, risk 1%. And then those other days, just risk 0.5%, and not be worried about what happens if your stats start to change. Then okay, cool, they change. But over time, you still, regardless of what it is, as long as you're sticking to the same rules on the same day, it still should work out, right? Regardless, and obviously you have to be, your risk to reward, along with your win rate, has to be positive, right? And so far for me, I have been every single day of the week. Um, and yeah, that's pretty much it. I hope I was able to answer anyone's questions. I really do appreciate everybody out there that's following along. And yeah, yeah. Thank you guys. So we're on our way. We're definitely on our way. I'm not. That's why I'm like, just slow and steady. Even though these things are still timed, slow and steady. The the ES accounts, one is sitting at $500 because I had a loser. I was up 1.5% at the end of last week, and then the other account, I was up as well. But now it's sitting at 3%. Those are the unlimited accounts, and I also have an unlimited account for Nasdaq, and that one's sitting at 3%. So I know that I have an extra. Like, I basically, if I'm able to pass all of them, I believe I have an extra two accounts. If that does happen, I will definitely leverage more on my live accounts once I'm getting those closer to passing. Let's say that I'm on a phase two and I already have four phase fours. Um, I mean, let's say I have two phase twos, but I already have four phase twos passed, right? Like, so I have four funded accounts already. More than likely, I'll sit there and leverage more than 0.5%. Maybe I'll just go to 1%. Like, honestly, from my back tested data, I should be able to risk 1% on the account, and not blow the account, right? And make substantial profit. I've never had a month where I've lost, right? I've had weeks, but never a month. And I've never incurred a drawdown that would have taken out my account. So I might just run the risk and trade it, just because I still have another two phase twos sitting in the pocket, right? Just to try to get the most out of FTMO. So I might dabble with that. So that's also on my mind. What else? I'm just like rambling on right now. My Forex funds. So before I started this channel. I had two FTMOs that I kept rolling over, and I also had two of my Forex funds. And I kicked myself in the ass pretty much every single month because I hit that 8% like nothing, right? Like I hit that 8%. I hit 4%, like whatever. So I could have been copy trading all these things to those accounts, but I haven't because I just wanted to focus on FTMO. A lot of it has to do with because these are 100K accounts and those are 200K accounts, and yeah, so I'm looking at it that way, right? So so yeah, so I'm more than likely gonna start those next week. I'm gonna see how this week goes. I'm gonna crank those, turn them on, and set one to copy the NQ trades, the other one to copy the S&P trades, and fucking pass those things, right? I do have another strategy um, that involves um, that involves EU, and one that involves gold. But by far, these are more profitable. I just like trading gold because it's like, hey, I trade gold. Right? Like I don't know if anybody has those like somebody asked me about like, oh, why do you trade indices over forex? And it's just like I like trading indices. I like I don't know. What do you do? Oh, I trade Nasdaq. It's just it sounds different, right? Um, I used to love forex pairs. I actually, so I told you guys a story about how I was able to take multiple six figures out of the market on Ugo's way, right? Um, before COVID hit, right? That like I thought I was God's gift to trading. I was such an idiot, right? I was just sitting there over leveraging but making money every time because my little strategy was like, oh, price can never go that far, and I had enough equity in my account to be able to hold my trades to the point where I bought a Tesla with that money, and then I was like, screw it, I'm gonna make a license plate that says Euro AUD, which I still have, because that paid for that Tesla. So I still watch Euro AUD. I love UJ. There's a definite strategy that I have on UJ as well, and yeah, that's my rant for the day. I'm probably gonna do a rant video because I keep getting these little rants. I have so much going on in my head, and there's so many mistakes that I've made trading, and like going down like, let's just say like the rabbit hole of signals or Telegram chats or MAM accounts. You name it, I've done it. Freaking EAs. I could sit there and write a novel on everything that I've seen, right? Scammers, scam accounts, scam brokers, price manipulation. Like it's insane, and that's honestly one of the reasons why I like um, prop firms so much because the way the business is set, I feel like there's less scamming on the price end, right? They don't need to knock you out because you're making too much money. I feel there's so many other people burning through accounts and not being able to do this where they're the ones that are supplying your pockets, right? They're the ones that are giving these companies the ability to pay you out. And most people that are going for prop firms won't over leverage their accounts because they really can't, right? Maybe there's a few out there that'll sit there and risk it, but to me, it wouldn't be the smart thing to do, right? Um, and just think about it, like we're in this because we want we want the capital that they're supplying us to be able to trade. And that's just me being completely honest. It's not the fact that I don't have capital of my own to trade. I don't have that type of capital where it's gonna say like shit, like 1% of $1 million, right, is $10,000. So you make 1% in a week, that's 10 grand in a week. That's it's life changing for some people. For me, it is at least. Um, Now, if you trade appropriately, like where you're trading 1%, it's different, right? It's not 1% on 100K is still $1,000, which is great, but 100K is a lot of money. Not everybody has $100,000 to dump into an account, and then if you want to make a substantial amount of money, then you're gonna have to over leverage that 100K. It's just these companies out there for a fee are giving us the chance to prove that we are traders and we can accomplish this. So I really do firmly believe in prop firms. Um, I have like this whole diagram planned out in my head on how once I get there, how I'm going to manage it, how I still do want a live account because I just feel like live accounts are bragging rights. There's so many people out there who are like, oh, you know, you're a prop firm trader. That's not real. I mean, try trading with real money, your own money, and all this other crap. I've traded with my own money. I've traded with. I'm trading prop firms. I'm gonna be completely honest. Me losing trades on a prop firm has hurt me more than losing money on a real account. Right? And my biggest hit on a real account was $70,000. So that I feel like that's bullshit. I feel like that's bullshit. It's just the way that you look at it. I'm really looking at this as my changing point in life as a trader, as somebody that day trades or whatever, where I have the correct psychology, strategy, and everything else to go along with it. I'm not saying that, dude. I am nowhere near being an expert trader. Um, I don't know any of the big words or any of that crap. I just like looking at this damn chart of little candlesticks going up and down and understanding where price might go, right? And it just so, dude, and the only reason why I fell into ICT, to be completely honest, were indicators because of Lux Algo's SM was it MCMC indicator, where it's like, oh, like this is a change of character, this is a break of structure. I was like, oh, that's so cool. And then I fell down the rabbit hole. And then when I started understanding what those things meant, I was like I understood that. And to be completely honest, like if you take a look at it, I'm not one of these ICT fanatics or any of that crap. There's still patterns to me. I get it that they're not patterns, but they end up making the patterns that people are looking for, right? Like it just so happens like if you're looking for a change of character, and then a break of structure, and you're gonna go in on maybe the pullback on that break of structure if there's a fair value gap. But that change of character and that break of structure made an M, right? Like if anybody's ever read Naked Forex, they talk about whammies and mullahs, which is an M, but the second peak is lower. So that's just basically market structure shift. It's all it is, and you're trying to catch that and write it down. And then it comes down to how often are you right? What time frame are you doing it in, right? Like that was another issue for me. I started looking at these patterns and I was trading them at any time of the day, which really isn't that doesn't work when you don't have a lot of volume. It could work, but like look right here. I'm sorry that I'm going on a rant. Right, this is 12 a.m. Right, so um, so let's take out. Price came up, came down, up, down, up, down, up. What's up? And add an extra one, whatever. You guys catch the drift here. So right here, right, the market shifted. In that book, long position, it tells you to go in on the close of the candle that broke the neckline. Stops below the M, right? Like covering your your swing low, and it's you know that was here. So what does this tell you? Like, this tells you if you're going to cover this, right? So you're saying that I believe that the market is going to go up. That is your belief. You're going to cover that belief because if it breaks this candlestick, then you were wrong, right? And that's all it is. It is, honestly, it's all statistics. It's all probabilities. And it really is patterns, right? Like, it is. Like, you go in on the breaker structure, right? Like, right off the bat. Like, if you're worried about this fair value gap that was created not to get what's it called, mitigated, then there are people out there that do trade the breaker structure, or it's like, fuck it, I want to get in the trade because I lose too many trades when I don't, right? So, anyways, I'm sorry about my rant, but yes, there's a million and one ways to sit there and look at the markets and for it to be profitable. By no means am I a guru or do I consider myself a professional. Dude, I am not professional at anything, right? Except for making like horrible dad jokes, and that's about it, right? I'm a professional dad. I'm a professional screw up. I'm a professional kid, but that's about it. Like, it. Um. Anyways, thank you for thank you for my therapy time and for listening to me. But yeah, guys. So I'll be back here tomorrow. I hope some of you got some information out of this. I know this was more of a rant than anything else, but I appreciate you guys listening. Honestly, you guys that have interacted with me have made me a so much better trader. And you have no idea how hard it's been for me before you guys to sit there and stick to my strategy, right? To sit there and stick to not trying to what's it called? Over leverage. Stick to like everything. In this whole scenario here, I would have I would have moved my stop out. Like, granted, price eventually came in my direction, but it would have been the wrong thing to do. Right? There's been plenty of times where I do move my stop out or previously, and I completely blow my account because I do not want to admit to being wrong. And the reality behind it, when you look at the Excel sheet, I am wrong 38% of the time. Right here. Right? I'm wrong 38% of the time. I am wrong over here 30% of the time. So I can be wrong. And that's me executing the trades perfectly. Like, absolutely perfectly. Which, obviously, if you guys were, been around the channel for a while, it doesn't happen. Because I get antsy. I was like, damn, and then I'll get in on trades where there wasn't real displacement and all this other stuff. But I feel like that's shit that happens. We're only human. This is more of a psychological battle. It really is. It's more of a psychological battle than it is anything else. Anyways, you guys have a great night, and I will see you here tomorrow.